So these are the other value adds that you get. Liquidity. So today, some of you would be in the fashion of a private limit, constitution would be a private limited company, some would be proprietorships, some would be partnerships. So those with a private limited company, you would have shareholders, but have you all printed your share certificates? I don't think so. So you know what we are talking about here is that suppose you had printed your share certificates and you had given ESOPs to your employees. Today, those ESOPs may not mean much to them because in case they need to sell it, they need to come back to you as a promoter and they have no other option. But if you list your securities, you are giving liquidity to your own share certificates, which means that they will be able to come and sell it on an exchange platform. High caliber employees, well, even the IIM graduates today, we have heard Mustafa here. So everybody wants to do, everybody wants to join a startup. He started a startup, but the other guys want to join a startup and not the big companies because, the lure of the ESOPs is so high that they know that, if this ESOP gets converted, the company hits the bullseye and the ESOPs gets converted, the kind of money that they will make would never be equivalent to what even the MNCs could be paying them. So if you are a listed company, your ESOPs could probably be one of the, could give you one incentive to kind of retain your employee. And as an issuer, the benefit that you have is that, currently you would be paying them bonuses in cash. That's a cash outflow again. You could do that by way of ESOPs if you are a listed company. Now, the same banks which actually are asking you for collaterals, here I want to share a story also. Your listed securities are accepted as collateral. Now, most of our stories are heard from our own, listed companies. So there was this company who actually called me up and said, ma'am, I put my house papers as a collateral in a bank and kind of taken a loan. And after my company got listed, what I have done is that I have put my, share certificates and I have got my home papers back. Actually, nothing changed, okay? He still was running the company. The company had always been growing, but just by, what you're actually doing is a wealth creation. What you're actually doing is you are converting your shares into a money equivalent. So your banks will accept your listed securities as a collateral. Thereby, again, you are increasing your chances of getting debt. You have a wider access of capital because you could do a preferential allotment and you could probably raise money again from public through a follow-on public offer. In your M&As, today if you are merging with another company or you're doing a deal with another company, you're probably doing cash deals. But if you actually get listed, these deals would happen through shares. You'd actually pass on your shares to the other company. Thereby, your growth capacity is increasing. I think I've covered most of these. Now, coming to wealth creation. So, what we're talking about is the valuation of companies' worth plus the enhanced corporate image and the brand equity. Now, what is written on the left is what is getting added because you're a listed entity. But what you are doing, the work that you are doing in the company will continue. So the growth that the company is doing is translating into market capitalization. Let me give a small example here. When we talk about share market, the only example that comes to anybody's mind is by, I guess, Reliance. So I will also give you an example from Reliance. Reliance hit the securities market way back in 1977, and they had a IPO of 2.7 crores, and they came out with the issue at par, which means that they raised 2.7 crores from market in 1977. From then to now, and you know that Reliance then and now is not comparable. A whole lot of things have happened to Reliance that doesn't keep it comparable, but still, it's a fraction of what it was in 1977, the Reliance that we are talking about today. But still, if we compare for the sake of analysis, today they are a 3,20,000 crore market cap company. What happens is if you are not listed, your growth is measured through your profits, through your net worths. But when you're a listed company, what you do is you add market capitalization to it. So I want you to consider that concept as a concept of wealth creation. Now, let us a few minutes on what does it take to kind of get listed on an SME platform. So it's the same segment in NSE, which means we have used the same infrastructure that we are having on the main board, which means that if you are today trading land security or any main board security through your mobile, you can do that with an SME listed company also. So same trading members, same merchant bankers, whoever you are going to today, you continue to go to buy your SME securities. So the same trading terminals, nothing changes there. I told you about a company having a paid-up capital of less than 25 crores. NSE has an additional criteria. We look for companies with 3-year track record and at least 2 years of positive accruals, considering the fact that most of the SME companies are into manufacturing. We look at the PAT levels. We do not look at the PAT levels, but we look at the EBITDA levels. Considering the fact that SME listing has to be kept simple so that the SMEs can and need not go through the same rigmarole that the main board companies do. The rules of listing has been kept really simple. You do not have to go to SEBI for approval. NSE will approve your application. You make an application to NSE. In case of a main board, you need at least 1,000 applicants to get into the IPO. In case of SME, you need only 50 applicants. The DRHP is in the same format, and you make an application and it gets approved, and then you are ready to list. There's a concept of market making, which for want of time, probably I can explain it to you, whoever is interested. The idea of market making is that there is continuous liquidity in the SME markets, in the SME listed space. So if anybody is interested, I'll probably detail it for you. So even in listing compliances, there are concessions given to SME listed companies. All you have to do is submit your half-yearly unaudited accounts instead of quarterly on the main board. You do not have to publish these results, which is again an additional cost. So you would see that the Reliance results and all are published in the newspapers. An SME listed company does not have to do it. You just have to put it on your website. You submit it to us and we put it out on our website. Migration, we have already talked about. So what is the listing process? You first engage a merchant banker. The merchant banker will do your due diligence and prospectus preparation, which is the DRHP document, the filing of the prospectus with the exchange, the investor roadshow, IPO process, and then you are ready to go. You are a listed company. So just to kind of take you through the benefits of, the process of getting listed. So there are lower issue expenses, no draft documents to be filed with SEBI, which actually reduces the TAT for getting listed. Minimum number of allottees is only 50. There's a market making concept which will ensure that there is liquidity in your stock, the reduced filing requirements, and finally, there's no need to publish financial accounts. If you have any questions, I'll be happy to take any questions that you have. What I'm told is that questions can be taken later, and I'm anyway going to be here around here for some time at least. So anybody who is interested in any questions could come to me. Thank you very much.